Welcome to It's the Economy. The first quarter GDP numbers will be announced today, and the CNBC TV 18 poll shows that the number may come in at 7.9%. Reserve Bank's forecast is 8% growth. Now, 8% is a great number, but even with 8%, the aggregate GDP output, the output number, works out to 40.4 lakh crore. And 40.4 lakh crore is a good 7% lower than the output in Q4 GDP, Jan, Feb, March. That was like about 43 lakh crore. So is 8% a weak number, or will we be surprised on the upside? What should we concentrate on when we get, the jungle of numbers along with the GDP? To help us understand the GDP numbers, I have with me two economists, Upasna Bhardwaj, Chief Economist at Kotak Mahindra Bank, and Kaushik Das, Chief Economist at Deutsche Bank. Kaushik, Upasna, thank you very much for joining me. Let me start with you, Kaushik. This is a little confusing. 8% looks very good. And yet, when you compare it to Q4, it is so much lower. Pre-COVID, Q1 is always lower than Q4 because it's monsoon months. But it is never so much lower. Why are all of you going with such a lower number for Q1?
So, Latha, first of all, I should mention that India's economy has been significantly more resilient than what people would have thought. 3 to 6 months before, when we were forecasting April-June, consensus had a number of about 7% for April-June GDP growth, even lower than what you are mentioning today. And it was only RBI who stuck their neck out and put a number of 7.8, and now they've made it to 8%. And finally, we are also forecasting 8% growth for April-June. Now, there are a lot of technicalities involved, as you pointed out. One is obviously 8%, from a sequential basis from January-March would be still lower, because January-March normally is a quarter when you have all the, fiscal year ending, and it's normally supposed to be on the higher side. And therefore, there is a, seasonality that April-June is normally lower than January-March. But it could be possible that we could get an upside surprise from 8% also. And, partly that could be due to the fact that the GDP deflator in April-June, which is calculated using WPI and CPI inflation, that could be very low, or in fact be negative, because WPI inflation was minus 2.8% average in April-June. So just to answer your question, I think 8% could be, a good number, but it could, you could have a positive surprise higher than 8% as well. And, probably that will kind of show that the resiliency is still there in the economy. But after that, you could expect a slowdown.
There is in the poll one number which was also 9%. But even if I take 9%, Q4 is so much better, or rather Q1 is still pretty lower, about a good 5 lakh crore lower than Q4. If I went pre-COVID, 2018, we don't see such a big difference. So, Upasna Bhardwaj, to you, I have read your GDP report as well, and you are actually a little more pessimistic. You are on the lower side, 7.5, if I'm not mistaken. You explain to us, Upasna, why are we not at pre-COVID levels of Q1 over Q4?
Latha, while we have been seeing a lot of recovery happening over a period of time, last quite a few quarters that we have been tracking, but the fact is it's a very patchy recovery. We still have quite a few, especially I would say within the industrial sector, we still have almost about 55% of the industry still not having recovered to pre-pandemic levels. So we still have a very patchy recovery. Also, if you look at since the pandemic June quarter-on-quarter numbers, it has been improving over a period of time. So the negativity has been coming down. So this quarter, compared to the last 2-3 quarters, if we look at June quarters, that is, quarter-on-quarter, obviously the pace of contraction is coming down. It will improve going ahead. So we will eventually reach to pre-pandemic, but we are still not there. Especially, like I said, because few sectors are still not recovered. They haven't yet recovered to pre-pandemic levels. And that is going to be dragging down growth. And that is the very reason why, specifically on industry, we are a little more pessimistic compared to, I think, industry consensus that you have got. We are services and agriculture, we still remain hopeful because we have seen the indicators suggestive of that for the first quarter. But I think manufacturing is where we still remain a little more pessimistic.
Okay. Kaushik, help us understand what are the big numbers we should watch out for. To my understanding, it is trade, hotels, transport and communication. That is the biggest weight for, those of you who don't care so much about GDP. That number, trade, hotels, transport and communication and broadcasting, is the weightiest sector, services sector. But you tell us, what would you watch out for, Kaushik?
So from the GBA side, Latha, we can watch out. One is the manufacturing sector. We know that that is reflecting how the corporate sector profitability has been for the quarter. And we have seen that January, March corporate sector profitability improved and manufacturing sector growth was also pretty high. Similar thing will happen in April, June. Given that input prices had fallen in April, June, you'd have expected corporate sector profitability to have done well. So manufacturing sector should have done well. So that is one thing to look out. IIP is not necessarily reflecting properly the move in the manufacturing sector GBA. It's the corporate sector profitability. So that's something to look out for. Agriculture has been very resilient last quarter also. This quarter, we are taking a little lower number at 3% growth, but that will still be in line with trend. So nothing, unless it's a big surprise downside or upside, it should be around 3%. Services sector is going to be the big, support for growth. As you mentioned, trade, hotels, transport could be 10-12%. Construction has been very good, in the previous quarter. Could slow down a bit this quarter because of rainfall, but that is also something to look out for. I guess then we have to look at the GDP side. Private consumption is something which I'll give a lot of importance to. If you remember that we got 2.8% growth in the previous quarter and October, December was just 2.2%. And private consumption is close to 60% of GDP. The one thing which is not tying up, and we discussed this in your last GDP show also, where Dr. Sen was there, is that if your services sector is doing so well, why is private consumption expenditure growth at just 2.8% or below 3%? Shouldn't it be higher? Or will there be a revision as we go forward into the GDP data where you'll see private consumption being increased? The other thing is the investment part, which has been very strong. And, we grew at about 10% in the previous quarter. So that should be also pretty strong in this quarter. So all taken together, you should get around 8% real GDP growth this time. Nominal GDP growth could be lower because of the, deflator issue. And it's a complete technical issue. And April, June is this quarter where a lot of distortions happened starting from April, June 2020. Okay. If you remember last quarter, April, June, the forecast was about 16% for that quarter, and we ended up getting 13% growth. Okay. So the base is also relatively favorable for getting a 8% growth in this quarter. But there are a lot of technicalities involved. We'll analyze that when we get the data. Also,
okay.
The perennial
just one number. Yeah. Just one number from you. What is your nominal? Okay, I got that. What is your nominal GDP number, Kaushik?
It's about 8 to 9%. We have taken it positive, but there is a possibility that it could be lower than the real GDP also, which has happened from time to time when GDP deflator has been lower.
Fair enough. Upasna, your thoughts. Tell us which is the most, say, three most important numbers.
Oh, absolutely. I think trade hotels is going to be the key. We're looking at about 12% plus number growth in the trade hotels component. Agriculture is about 5.4, 5.5% that we're looking at. The Rabi production was very good previous quarter, so that impact is going to be witnessed in this quarter. So I think we will be seeing a reasonably good agricultural output this time. And of course, like Kaushik said, I think consumption is where I remain worried. It's again a patchy segment. And we have been seeing sub 3% Y&Y growths in the previous 2 quarters as well. And I think private consumption is where I'll be watchful about, because that is exactly where the indicators are also suggestive that there is some kind of fatigue in the rural demand. Urban is still about holding up, but I think we are still to see. If we look at the industrial production data as well, within that as well, the consumer segment still has not recovered entirely to the pre-pandemic levels. So, there is distortion clearly, and it is getting witnessed in the previous 2 quarters GDP numbers as well. So private consumption will be key, apart from, of course, investment that we will have to look at.
Yeah. Actually, I didn't get too many people giving me forecasts of private final consumption expenditure. Just for those who don't, again, follow it, what everyone looks at is the output side. there is an expenditure side to the GDP. How was it spent? Was it spent on government expenditure, or was it spent on private consumption? Was it spent on, investment? That part, I have not got too many observations, but private final consumption expenditure, the average of two that I got works out to about 7.5%, 7.6%, which would be much better than the 2.8% that you're referring to, Kaushik, in Q4. What's your sense? Do you think consumption has improved if you looked at lead indicators? I mean, electricity and auto sales, consumer durables. Does it look like we did well on consumption in Q1?
So yeah, we should get 6.5%, 7% if you have to get headline, GDP at 8%. Mathematically, you have to get 6.5%, and investment growth has to be close to 10%. So that both of them will support a real GDP growth of about 8%. Now, consumption, the worry is that RBI has hiked interest rates quite aggressively over the last year, and there is a lagged impact of all these interest rate hikes on consumption. Inflation has also moved up on related to food prices. So whether consumption kind of holds, even if you get a 6.5%, 7%, particularly that is because of the favorable base as well as the deflator issue. But I would be concerned going forward on private consumption because RBI will keep rates higher for longer, and there is a risk that RBI could hike rates also if inflation remains high. So private consumption is something we need to be worried about, and that is why we think maybe next year, starting from April-June quarter, RBI will start cutting rates to support growth when you see that slowdown in private consumption beyond the April-June quarter.
Okay. I know there is a lot of numbers and a lot of issues at stake. After all, GDP is a very large number. Upasna, Kaushik, that's all I have time for. But I think you'll have put some very important points on the table. What are the numbers you'll watch out for? We have to watch out for private final consumption expenditure. Is it growing? And even if it does very well, economists will be skeptical about how it does in subsequent quarters, because not only is the Reserve Bank raised rates, it is also tightening liquidity. They're extremely worried about inflation. So we could see that going down. The Reserve Bank's full year growth stands at 6.5%. The average I got was 6.3%. And many of them are way below that 6.3% mark as well. It will be interesting to see that if this number, today's number, comes in well over 8%, will everyone revise up or will they not revise? Because you are worried that both government may go away from capex to revenue expenditure ahead of the elections. We already saw one example of fuel price cuts. And secondly, whether the Reserve Bank's tightening is going to slow down growth in the coming quarter. So lots of questions to which we may get some answers at 5:30 today when the GDP numbers are announced. Thank you very much, Upasna and Kaushik, and thank you, Bazaar viewers. After a break, it'll be time for Chartbusters.